A lot has changed since we spoke to Simon Brown, portfolio manager at Makwe Fund Managers. Phaswane Mphahlele speaks to us now on the broader picture of developments on the markets. A good evening to you, Phaswane. Let's talk through how investors are focusing on that expected, on the Chinese economic growth data, rather, that's come out quite positive, beating expectations, as well as the U.S. policy meeting outcomes that is expected later on this week. How is that directing activity?
Evening, everyone. Well, investors have been gradually looking into China, dipping their toes, and this follows key indicative commodity prices that have been going higher, rebounding, whether you look at it from a price volume or volatility standpoint. And investors are now growing some optimism that China could manage to meet that 5% growth target. And this is at the back of the risk managing it despite the challenges in the property sector. Investors are very much optimistic, especially coming with the economic data they've been seeing in 2024, the positive change in inflation, today's industrial activity that is better than expected, along with retail sales and fixed asset investment. It has encouraged investors that there's a momentum around China. Some of the resource stocks we saw today, they actually got a bid, but the gains were kept. And this is at the back of central banks being the focus of the week, generally starting from tomorrow. Investors, when we look at the central banks outcomes, looking at the more influential one, the United States, the investors generally expect a pause and nothing changed on the interest rate front. And the key thing will be around the messaging. What is it? What is the outlook as central bankers looking in terms of interest rate going forward? And then we saw that interestingly, we saw that our yields were actually priced higher coming in from last week until today, indicating that bond traders have actually got into the consensus that yields will remain higher for longer, especially with the probability that the June rate cut is going to be more or less of a coin toss, 50-50 chance as it stands right now, because the economic data that is coming in, globally filtering in, is indicating that inflation is going higher, re-accelerating along with growth. And when is that such a theme that we face in the short term going into Q2, that means that tech will be one of the biggest gains, and that's what we're seeing in global markets in the different indices, tech taking up some of the gains compared to the other stock markets, other stocks.
How have emerging market currencies, including the rand, reacted then to all these developments?
Well, emerging market currencies have been rather mixed, we must say. Some of them saw some weaknesses. And this is at the back of the dollar having to show some gain back in the green after 3 weeks of losses, especially following that inflation print coming in the U.S., indicating that the inflation is still sticky, and therefore it might have a negative implication on interest rates remaining higher for longer. That just supported the dollar. When we look at the individual emerging market currencies, we're seeing the likes of the Brazilian real. It saw some slight weakness of around about 0.7%, because investors have priced in the fact that there will be rate cuts on that front by around 50 basis points. We're looking at the Indian rupee that it showed some slight weakness too, and this is at the back of the dollar strength, and in some of the foreign flows are not flowing as such, but it's still holding a firm earnings, and it might be a challenge for India now, especially with China coming back into the picture. We see the Chinese yuan was relatively unchanged out the back of those positive economic reports. Meanwhile, the Russian ruble, it was about a 1% strengthening today at the back of Putin winning its elections, and the further it's in a close tight range, and it's supported by the higher oil prices. When we look at the rand itself, the rand has shown some relative weakness. It passed about 1% of weakness at 18.95, and this is at the back of the stronger dollar that is gaining its ground. We're seeing the commodity prices that we've been benefiting from easing, and when the last factor to do with the 50-50 chance we sit at in terms of interest rate cuts.
Thank you so much for your contribution. As always, Phaswane Mphahlele is a portfolio manager at Makwe Fund Managers, talking us through the market.